I'm bringing in JD Durkin. He is the host at public.com and contributor for CBS News. Good afternoon, JD.
Good afternoon. What a fun day and a historic day for the folks over at Goldman Sachs. This is awesome.
A very historic day. And, you know, I want to talk about, we heard David just mention all the milestones that they've achieved, being such an innovator, a leader in the banking investment space. However, they've had significant growth, especially recently, right? Let's talk about that. What do you think is driving the most recent gains?
Yeah, first of all, it's a pretty killer dividend stock at $275. It's obviously a financial leader. It's slightly outperforming not just the overall S&P 500 trendy, but the other big financial names. It's trading better so far year to date than even names like certainly Morgan Stanley by a far shot, and even JP Morgan Chase there as well. And you hear David Solomon be unafraid to talk about AI. He says, look at the future of all these data centers, these massive pieces of infrastructure that drive the AI revolution moving forward. They all need to be financed. Who better than Goldman Sachs is his argument to lead that AI revolution forward. I think that helps explain the growth in part that the bank has seen, the financial institution has seen, and I think helps explain why the stock has traded so well so far in 2024.
Let's talk another hot topic, focal of forefront conversations. I can't even talk, but it's at the forefront of conversations here on Wall Street is obviously the Fed decision, rate cuts. We haven't really seen much movement in this space throughout 2024, and no rate cuts have taken place. So how is this impacting the overall banking sector?
Yeah, absolutely. I think in this high interest rate environment, we got the separation between the haves and the have-nots. Those smaller banks, the smaller institutions, think of those regional names we covered a lot this time last year. Yeah. They're really facing the pressure. They've got previously issued debt, and that debt now becomes worth less in this new era of new issue debt at higher interest rates. But you got the big names on the block, the too big to fails, including maybe a company here like Goldman Sachs. They're doing really well in this high interest rate environment, and I expect that to sort of continue here. But hey, we came into this year expecting a lot of rate cuts. We haven't had any so far. If we don't even have any, or even if we just have that one in September, look for names like Goldman Sachs to continue to benefit.
A lot to look out for. Thank you so much, JD, as always.
Thank you.